Good morning, I'm Lauren Hayes for the Finance News Network. Stocks climbed on Friday as Wall Street closed a volatile week on a high note, despite some disappointing earnings reports. The move comes ahead of 2 big weeks of central bank policy decisions and earnings. This week we see earnings from 150 S&P 500 companies, including Microsoft, Meta, Amazon, General Motors and Coca-Cola, to name a few. The US earnings season has offered so far some mixed takeaways, as it remains to be seen whether 2023 estimates will ultimately see the market reset lower, as the more bearish strategists believe needs to happen to reflect the economic fallout from the Fed. The Dow Jones Industrial Average gained 2.5%, the S&P 500 rose 2.4%, and the Nasdaq Composite added 2.3%. Friday's moves extended the market's gains for the week. The S&P 500 rose 4.7% and the Dow gained 4.9%, while the Nasdaq rose 5.2%. Earnings reports limited gains for the market but offered important insights into the US consumer. American Express stated that its travel and entertainment segment saw spending climb 57% from a year ago, with volumes in its international markets surpassing pre-pandemic levels for the first time in the third quarter. The company added that it expected the recovery in travel spending to be a tailwind, but the strength of the rebound has exceeded Amex's expectations throughout the year. Across the sectors, no real weakness to note despite mixed earnings reports news. Bank stocks were once again a bright spot, with Goldman Sachs gaining 4.6% and JP Morgan Chase adding 5.3%. In tech, social media company Snap fell 28% after reporting a quarterly revenue of $1.13 billion, below expectations. Snap is the first of the advertising-reliant social media companies to report their earnings, so investors and analysts often use Snap as a sign of what's to come for the rest of the group. Shares of Facebook owner Meta fell 1.2% and Twitter 4.9% as advertisers continue to cut marketing budgets. In commodity news, mining giant BHP is concerned with Chile's mining royalty bill. BHP warned that the proposed mining royalty bill in Chile would affect competitiveness and encourage miners to reconsider investments. The company mentioned that the current bill would lead to a reassessment of an announced $10 billion investment portfolio, since it was designed without considering such an excessive tax burden increase. In Australia, we have seen this play out with the coal royalty tax in Queensland, with the Queensland government budgeting for a $1.2 billion per annum from the royalty tax on surging coal prices, only to receive $1.2 billion in the first 6 weeks of the tax introduction. It seems like BHP lobbying is about to go into overdrive across the globe. On the currency front, one Australian dollar has strengthened compared to the US dollar on Friday, buying 63.84 US cents. The iron ore futures are pointing to a 1% gain. Gold gained 1.2%, silver added 2%, copper gained 1.9%, and oil added 0.6%. The SPI futures are pointing to a 1.4% gain. I'm Lauren Hayes. Have a great day.